Hey everyone, welcome back to Corporate Decoder, the place where we break down those dense corporate filings into something you can actually understand and maybe find a few juicy secrets. Today we're diving into STEPAN Company's latest 8K report, and let me tell you, it's all about keeping their top brass happy under some specific circumstances. Stick around to decode what this actually means for the company and its employees before we jump in. If you like getting these kinds of insights straight from the source, make sure you hit that subscribe button and the notification bell. And hey, we've got a fantastic community over on Discord where we chat about these filings, and we'll find the link in the description below. So what exactly is this 8K filing all about? Well, it's a report that publicly traded companies in the United States have to file with the Securities and Exchange Commission, or SEC, to announce major events that shareholders should know about. Think of it as a public announcement system for significant corporate news. The key date here is the 26th of November 2025. On this day, STEPAN Company, through its board of directors, and specifically its Human Capital and Compensation Committee, approved a new plan. This plan is called the STEPAN Company Key Executive Severance Benefit Plan. Essentially, it is a way to provide financial security to certain high-ranking employees if they lose their jobs under specific conditions. STEPAN Company's stock is traded on the New York Stock Exchange under the ticker symbol. CL. This is important because any changes or plans that could affect the company's financial health or executive stability can ripple through to their stock price and investor confidence. This section, item 5.02, is where the meat of the announcement lies. It covers changes in directors and key officers, and importantly here, compensatory arrangements for certain officers. So, the core purpose of this new severance plan is pretty straightforward. It is designed to offer cash and other benefits to a select group of employees, including the company's top executives, if their employment ends in a way that the plan defines as a qualifying termination. What qualifies as a qualifying termination? Let's break it down. It primarily covers two main scenarios. First, if an executive is let go without a good reason, and it is not related to a major company change, like a sale or merger. This is what they call an involuntary termination without cause. Second, it covers situations tied to a change in control. This means if a company sale or merger happens and the executive is then terminated without cause, or if their job situation changes so drastically that it's like they were forced out, what they call a constructive termination. This second scenario is particularly broad, covering terminations that happen either on the date of a change in control or within 2 years after it. Now, what do these executives actually get if a qualifying termination happens? The plan outlines two main areas of benefits: cash severance and continued health insurance premiums. The cash severance is calculated by taking the executive's current base salary plus their target annual bonus and then multiplying that sum by a number of months. This number of months depends on the executive's tier and the specific reason for termination as detailed in a chart in the plan. The filing specifically mentions that Mr. Rojo is in Tier 1 and all other current executives are in Tier 2. This means some executives are getting better terms than others. Table TRTD TTD TDP severance period. TBP involuntary termination TBP without cause T by TTD TDP severance period. PP change in control BY termination TDTD 120D. TDTD 18 months, SUBI DTD 36 months, SUBI DTRTR. TD22D 12 months, SIDE TD 24 months, SIDE 24 months, SIDE tradie table. Let's look at that chart to understand the payout differences. For Tier 1 executives, if they are terminated without cause, they get 18 months of their salary and target bonus as severance. If it is a termination related to a change in control, that jumps up to a whopping 36 months or 3 full years. For Tier 2 executives, it is 12 months of severance for a termination without cause and 24 months or 2 years if it is tied to a change in control. This is a pretty substantial parachute for these top folks. On top of the cash, the plan also ensures that executives continue to have health insurance coverage for a period. The company will make payments essentially covering the difference between what the company was paying and what the executive was paying for health insurance, including for their dependents under COBRA. This coverage continues for the same duration as their severance period, or until they get new insurance through new employment or become eligible for other comparable coverage. This is a nice perk, ensuring they aren't burdened by immediate healthcare costs after a job loss. However, it is not a free handout. To get these severance payments and benefits, the executive must sign a release and waiver, essentially agreeing not to sue the company. They also have to stick to certain restrictions outlined in the release and other company documents. If they don't honor these terms, they can lose out on their severance. This full plan document is filed as Exhibit 10.1. While we've covered the main points, the actual plan document will have all the nitty-gritty details, definitions, and specific clauses. Now, let's put this into perspective. Why would a company like STEPAN Co implement such a plan? It often comes down to attracting and retaining top talent. In competitive industries, offering robust severance packages can be a significant draw for experienced executives. It also provides a sense of security, knowing that if the company undergoes major changes, potentially leading to layoffs, their financial well-being is somewhat protected. This report is signed by Sean G. Lyle, Vice President, General Counsel, and Secretary. This indicates the report has been formally reviewed and approved by key legal and administrative personnel within STEPAN Co. Looking at STEPAN Co. and this severance plan, it signals a focus on executive retention and protection, especially during uncertain times or potential corporate shifts like mergers. The tiered system is interesting, suggesting a clear hierarchy in how these benefits are applied. While it is standard practice for publicly traded companies to have such plans, the specifics of the durations here, especially the 3 years for a change in control termination for Tier 1 executives, are quite generous. This could be seen as a positive for employee morale among the top ranks, but investors might scrutinize the potential financial impact of these payouts if they are triggered. The company's overall financial health, which we're not deeply diving into with this specific filing, will ultimately determine how sustainable these benefits are long-term. For STEPAN Co, the strength here is clear executive security and potential for talent retention. The weakness could be the financial burden if many of these severance events were to occur simultaneously, especially in a scenario where the company is already facing financial headwinds. The opportunity lies in using this plan as a strategic tool to navigate upcoming market changes or strategic realignments without losing key leadership. The risk is always that these payouts could be seen as excessive by shareholders, potentially impacting investor sentiment. In conclusion, STEPAN Co has put in place a structured severance plan designed to reward and protect its key executives under specific job termination scenarios. It is a clear signal that they value their top leadership team and are preparing for various organizational futures. Alright, that's our decode of STEPAN Co's latest 8K filing. What do you think about these executive severance plans? Are they a necessary tool or an unnecessary expense? Let us know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more corporate insights. And don't forget to join our Discord community for more in-depth discussions. Thanks for watching, and well, see you in the next one.